And welcome to the presentation this morning on what you need to know about trading Forex binary options and spreads. My name is Gail Mercer and I'm going to be your hostess this morning. Now before we get started, I would like everyone to take just a moment to read over the Nadex risk disclaimer. Any type of trading is going to involve risk, and the Nadex binary options and spread are no different. They do involve risk. They can be volatile, and you can lose money. Now, for those of you that are not familiar with me, I have more than 15 years of trading experience. I started out with a company that programmed indicators and just simply fell in love with the price bars. I specialize in price action, volume analysis, and volume divergence because I believe they are leading indicators. I'm also a frequent contributor for Stocks and Commodities, Traders World, and Top Shelf Magazine. I've also been a speaker at Traders Expo, Traders World, Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options, Keeping It Simple Strategies, New Trader's Guide to Trading Nadex Binary Options and Spreads, and Trading Nadex Binary Options Using Currencies. Now, why should you trade Forex versus other markets? Well, for me, it's because Forex is truly a 24-hour market. It moves literally 23 hours a day with the only closing period from 5 to 6 p.m. New York time. Now, there are 10 markets in Forex with Nadex binary options and spread versus 4 U.S. indices or 2 Asian futures or 2 European futures. Now, the Forex symbols that are available on Nadex are the Aussie yen, the Aussie dollar, the euro British pound, the euro yen, the euro dollar, the British pound yen, the British pound dollar, the US CAD, the USD Swiss franc, the USD JPY, which is the USD yen. Now, there's always a market to trade with currencies. For example, Japan and Australia, they open in the evening and they close at 2 a.m. Then you have France, Germany, London, Sweden, and Switzerland, and they open at 3 a.m. Actually, Germany opens at 2 a.m. and they close at 11:30 a.m. Then you have Canada and U.S., and they open at 8 a.m. and close at 5:15 p.m. Now, there are fewer opportunities with the indices because really they're only open from 8 a.m. to 4:15. Anything outside of those areas are really slow moving markets. Now, the commodities close early. They close at 1:30, crude closes at 2:30, and silver closes at 1:25 p.m. You also have the underlying markets. They have different expirations. For example, the indices expire March, June, September, and December. Gold expires February, April, June, August, and December, and crude expires every other month. Now, why trade Forex versus other markets? Okay, number one, you have a very small strike width on the 2-hour binaries. For example, the Aussie dollar, the USD JPY, and the euro dollar all have a 4-pip strike width. Now, what that means is from one strike to the next strike, there is a difference of only 4 pips. Okay, now that brings us to the next question. What is a pip? It's actually one full increment in price. If you notice on this chart over here on the right-hand side, you can see that the price is 1.0892 apostrophe 4. That apostrophe 4 is the half pip, okay? In other words, a full increment in this market would be if it went from 0.0892 to 0.0893. That would be a full pip, okay? Now, most pairs do have 4 decimal points. The 5th digit is considered the half pip. The exception to that rule are the yen pairs. They have 2 decimal points. The 3rd decimal point would be the half pip. So when you see the USD JPY at 110.449, 9 is considered the half pip. The full pip movement would be if price moved from 110.44 to 110.45. Does everyone understand about the half pip? Because it makes a difference. Okay, now what are some other differences between the Forex and other markets? Well, the indices move in points, and each index moves differently, okay? Wall Street, which uses the underlying Dow Jones, simply moves in full point increments. The US 500, which uses the underlying E-mini S&P 500, moves in 0.25 increments with 4 increments or ticks to a point. The US small cap, the underlying is the E-mini Russell 2000, and it moves in 0.10 increments with 10 ticks to a point. Now the commodities move even more differently. Gold is in 10-cent increments, 10 ticks to a point, but crude moves in pennies. Now, on the Aussie dollar, Euro dollar, USD JPY, you have 22 2-hour expirations. You also have dailies for 3 a.m. expirations, 7 a.m., 11 a.m., 3 p.m., 7 p.m., and 11 p.m. And then you also have a weekly expiration. On the indices, you only have 7 2-hour expirations, and you have 2 dailies, both ending at 4:15, and then you have a weekly. This just shows you the number of 2-hour expirations and dailies versus the other markets. Okay, commodities, you have gold has 4 2-hour expirations, crude has 5 2-hour expirations, and they each have dailies and weeklies as well. How about the other not listed 7 pairs? Some of them do have the 22 2-hour strikes. For example, I believe the British pound dollar has them. Some of the others, like the Euro British pound, does not start until 8 o'clock. Patricia. Now, how do you identify the best Forex market to trade? Well, Japan and Australia opens in the evenings, okay? So you can trade the yen pairs and the Aussie pairs. Then you have France, Germany, London, Sweden, and Switzerland open it at 3 a.m. That provides you with the euro and the British pound currencies. And then you have the U.S. opening at 8 a.m., along with Canada. So you could trade the euro dollar, the euro, the U.S. dollar, the British pound, the yen, the Aussie, and the Swiss franc. Okay? Thank you, Jason. Okay, now there are differences in volatility, okay? For example, the U.S. market hours generally will have the most volatility, and that is generally the hardest session for new traders to trade. The London market hours generally will have less volatility, but it's also what we would consider more seasoned traders. In other words, I would expect the market to move better during London than the US. They're, to me, just a more seasoned and mature set of traders, okay? Then you have the Asia market hours, and they have the least volatility, but you still can get good moves during Asia. Now, the greater the volatility, the harder it is for new traders in general because the markets turn faster, okay? The greater the volatility also increases the number of actively traded strikes and typically will also increase the premiums on binaries in spreads. Now, one thing I absolutely love about the binaries and the spreads is the ability to limit your risk during the market report. When I traded spot Forex, I never would be in the market during a market report. And this is really the strong point to me for binary options and spreads. I can actually trade any market report now and have limited risk. This is a webinar that I did last week, and it was for the Bank of Canada rate announcement, okay? And you can see, my bias was basically to the downside, okay? Now, how would you see that? Notice how many short positions I have on. Here's a short, and I have a whole list of shorts here. But I also know that the market, especially during a rate announcement, can go against me. So what did I do? I did some long positions, okay? I did a long spread, also did long binary options, okay? Does everybody understand that? Why could I do that? Because notice what my risk is on all of these, okay? Most of my binary options had less than $20 of risk, okay? And that's very important to me because what's the maximum payout on a binary option? $100, okay? So if I limited my risk in both directions to $20, my maximum risk on both positions is $40. If one makes money, okay, then I'm only going to lose $20 on the other side. Does everybody understand that? There's always a scenario where you could lose on both sides, Abraham. But this is the Bank of Canada rate announcement. I know from all the historical data that I have that the US CAD typically moves 150 pips at the rate announcement, okay? So you're going to more than likely have 150 pip move, okay? Now, as you can see, under the indicative index, price was at 24.12, okay? You can also see that I'm within 100 pips of where my strikes are. Does everybody see that? So I am simply saying I know the market is going to move. My bias is to the downside, okay? But I also realize that it could go against me. So I did some that would cover any potential move against me, okay? All right. What happened at the rate announcement? Okay, the market went against me. I anticipated it to go down. It actually went up. Okay, now the total losses was 1,085. The total profit on the longs was 2,003. The profit after the report was $945. Does everybody understand that? Right, Patricia, because I limited the risk. No, you can exit a binary option anytime you want, provided there's a buyer or a seller. James, I'm not sure I follow your statement that it would take a long time to figure out. Okay, look, you have $100 maximum payout. Okay, you have 20 on the long side, 20 on the short side. Okay, so provided that one makes money, okay, you're going to lose $20. Okay, so 100 minus 20 equals 80. Minus the $20 you paid to get into the trade still leaves you a profit potential of $60 per contract, provided one expires in the money. Now, I usually exit at 80, so that still leaves me a profit potential of 40. Does that make more sense to you, James? Now, again, this is on average. Look at some of the risk on these. I had 14 on this one, 13 on this one, 14 on this one, 14 here, 16 here, 14 here, 14 here. This one had 25 average. This one is 25. I mean, 25 was my maximum, okay? And I knew as long as it moved, more likely than not, I was probably going to realize a profit or at least cover my losses. Now, think about how many market reports are out there for Forex. The Aussie unemployment rate, okay? The Aussies generally moves 40 pips, okay? What's the strike width on the Aussie? 4 pips. That means if it moves straight up from low to high, that's 10 strikes. You can get some really cheap binaries on that. I think there's a webinar where we actually traded the Aussie unemployment rate. If you go and look at the webinar archives, look for the Australian unemployment webinar. We actually traded that. And remember, when you get into the Asian session, then you get lower volatility, which means, hey, you could be out 2 strikes for $10 or $15. That's pretty cheap. Do y'all understand that? Tomorrow we have the Euro rate announcement. I believe it's tomorrow morning. Okay. Do you want to trade the rate announcement or do you want to trade the press conference? Well, historically, based on the information I have gathered, it is the press conference that moves the market, not the rate announcement. Does everybody understand that? I've been gathering the historical information for the last 10 years, Sherry. I have it in a database. Can I give you a scenario of what I would purchase for the euro? No, because those binaries will not be available until tomorrow morning. I do the 2 hours typically. Where does the press conference take place? Over in Europe? Because ECB hasn't indicated a rate change in a very long time. Language is the most important, correct? You know, I can't say yes or no to that, Abraham. And the reason is, you know, for the past 10 years, it's been the press conference that moves the market. So, you know, even if the rate change hasn't been in a long time, why does it always move usually at the press conference? Is there a place to find the dates and times for any upcoming announcement? I actually use Forex Factory. Hold on and let me get my mouse back. So if you go to Forex Factory, I actually plan my schedule around these market reports. So what I generally do, will put it on a weekly view. And then I come up here and I just filter everything but the holidays. Take off the ones that I don't care about and I apply the filter. So for example, tomorrow morning at 7:45, you have the minimum bid rate. That's followed by the Canadian core retail sales in the ECB press conference. But notice that tomorrow is a bank holiday for Australia. So that means that the Aussie will probably move slower than normal, okay? Then you have the Canadian CPI, you have the core durable goods, you have the British pound, Bank of England Governor Carney speaking, and the Bank of Japan Governor Kuroda speaking. Then you can also even go to next week, okay? What do you have next week? Next week, the biggest one that is going to come out, in my opinion, will be the non-farm employment change. I'm actually going to be doing a webinar during the non-farm employment to show you how I trade the market reports. So if you haven't signed up for it, you might want to sign up for that one. That is a special webinar with Nadex that I'm doing. We also have FOMC next week, as well as the crude oil inventories. Then if we go, you know, to the next week, what do you have? The week after that, you have the Australian rate announcement. My favorite to trade on that one is actually the unemployment. Then you have the British pound. British pound doesn't move typically as much. And then you have the Canadian on February 9th. This is a good one to trade, typically. The Canadian employment change and unemployment rate, also a very good one. Yeah, let's see. Let me open up one of my documents and I can show you. Okay. This is the 2015 market volatility report that I did. And let's just go to the U.S. market reports. I think the non-farm is under that one. So, for example, the currencies that I would want to focus on for non-farm employment change because of the historical values would be the USD CAD and the USD JPY. Okay. Now, these particular two move about 84 pips. And Patricia, like you said, it hasn't moved as much. Now, this is what I do. Okay. I divide that number by 2, so that gives me 22 pips each. Okay. Now, this is my worst case scenario is I can anticipate a 22 pip move. Are you with me so far? Okay. If I can expect a 22 pip move, and I know from experience I need it to move 2 strikes in my direction, okay, and that's above where I'm at, okay, I want it to go above my strike, 2 strikes, okay. On the USD JPY, that is 4 pips per strike, okay. So that means I need it to go 8 pips above my strike, okay. So let's say, let me look and see what it's trading at right now. Right now it's trading at 109, sorry. 109.04. Okay. So I know it has to go 8 pips above my strike. Okay. So that means I could go to 109.12. And immediately this is the binary that I would target, because that gives me room for it to go another 2 strikes up to 109.20, and then I will more than likely have my profit target. That's the way I calculate it. Did everybody follow my math there? I use math a lot in trading binaries. Would I go short? Also, again, it comes down to risk, okay? What am I targeting? I'm targeting strikes that are around $15 to $20, okay? Now, here's the question. If I go to 109.12, can I get it for $15 or $20? Okay. And then on the flip side of that, I'm going to go down 8 pips, and that would give me a target of 109.96. Now, these would be my targets. This would be my long. This would be my short. Okay. Could I get both of these for less than $40? If the answer is yes, they're always out of the money if you're spending $20. Okay. If the answer is yes, my risk is less than $40, I'm probably going to take both sides. Do you understand that now, James? What if I can't get both sides? Then I'm going to go directional. Well, you have to use huge stops if you're trading spot Forex, Patricia. You don't have to do it if you're trading binary options. You can if you want to. You can go and do the in the money, Patricia. And if you want to risk a lot of money, you use the in the money binaries. You know, I choose to limit my risk. You know, if I go back and look specifically at, I like charts and graphs, as you can see. Let's go look at market reports that affect the USD JPY. Okay, you've got the monetary policy statement and the Bank of Japan press conference. I generally don't trade those because look at the movement. It's not that big. Oh, Patricia, you'll love binaries. But, you know, it's just, it's as simple as, you know, will price be above this level or not? It's one that I wrote, James. It's got 10-year averages in it. This one is from 2015. I did do one from 2017. I believe it's in my book on trading currencies. You know, out of all of the British pound reports, the only one that I'm likely to trade is the bank rate or the CPI. Okay. The US CAD, I love the unemployment. I like the rate announcement. The others are okay. I may or may not trade them. Depends on whether I can look at it and see the direction. The ECB press conference, again, your typical movement is about 80 pips. Divide by 2, that gives you 40 pips. You need to come in under that number. You know, the Aussie reports, the cash rate statement, 50, employment change, 41. You know, these are historical values. There's no guarantee, but by dividing by 2, a lot of times you're still within that range, okay? And again, this is all historical. Anything can change in the future, okay? Any other questions on that aspect of it? Yes, most of them are monthly reports, Michael. And I have actually traded both directions and made money on both directions. But you have to be quick to do that too. Because, you know, if you notice over here on the US CAD, do you see how it went down to 2,400 and then popped back up? Now, you have that option too. You do have to be watching it and you have to be really quick, okay? The bottom line is, if you're trading Forex binary options, you have more opportunities to trade around the clock. If you have a day job, hey, you can still trade Asia or London. I have a lot of people that do that. If you're a new trader, I really suggest that you start with the lower volatility periods, just because it gives you longer to think through your processes instead of trying to do it during the US session. And I think your learning curve is actually shorter, okay? Only because you can focus on what you're learning instead of jumping around and trying to learn everything at one time. Okay? Now, my website is TradersHelpDesk.com. I also have a blog there. If you go, just click on the blog, and I have tons of videos on binary options. And you can also email me at gm@tradershelpdesk.com. Once you get to a strike, do you exit? Not necessarily. Again, I want price to move 2 strikes in my direction. That usually I set a target at 80, and typically when I set a target at 80 and price moves 2 strikes in my direction, then I make my profit target. Okay, that's generalization, doesn't always work that way. Okay, but you know, let's say that I'm sitting here and I'm looking at it and it's trading right up above my strike price, but a reversal bar forms. You know, well, I have more information now, and I actually may exit the trade because I see the reversal bar coming in. So you're still a trader, okay? You're still paying attention to your charts. Ranges should be wide, otherwise it could be that in both directions, long and short, a loss in very volatile times. No, Patricia, I don't think that's right. And the reason I don't, hold on just a moment and let me see if I can bring up the Nadex chart and show you. You're looking at it as it has to move, okay? With binaries, it doesn't have to move. It just has to expire in your favor. That's what makes it so cool to trade. Let's see here. I'm bringing the Nadex platform up so I can show you, Patricia, because I don't think you're understanding it. Let's see. Okay, I just want to reiterate that this is educational purposes only. Okay, it's not to be construed as trading advice. Okay, because I want to show you what I'm talking about. Very seldom am I in the market at expiration, James. What time is it? 11:38. It's 11:38, okay? So I'm going to do a very quick binary. It's got 21 minutes, okay? And right off the bat, I can tell you that this is your at the money, okay? Well, I actually believe, or my bias, okay, is to the upside, okay? So if my bias is to the upside, I'm going to do one contract here for, well, if I can get into it, it's moving pretty quick. May have to go back and, oh, there we go. Now I'm in, okay? Now, let's say that you don't agree with me and your bias is to the downside, okay? I'm going to do one short, okay? Well, I actually did two, but that's okay. Now, let's go and look at the actual chart, okay? And let me extend this out so you can see all of them. Okay, so basically what we have here is I believe that the market will go up and it will be greater than this number right now. What does that mean? Okay, Patricia, are you ready? It means that price simply needs to expire at 109,101. This is the half pip. This makes a difference. Okay, with the binary, that half pip makes a difference. Okay, now, can I click on this and exit right now? Sure, I can do that. Okay, but I can also wait and see if it comes above here. Okay, can I exit this? I can put an order in and I can exit that just as quickly. Okay. Now, here's the good thing. On the short side, price simply needs to expire at 109.02 or less. It doesn't use the half pip on expiration, okay? Well, if it did, it would be 0. I'll put it that way. Can you close both? Well, you're going to have to click, okay? So, for example, if I want to close this one, I'm going to click and I'm going to highlight that and say, get me out, okay? Now, I'm out of that one. I can come back here and I can say, okay, get me out, and I'm out of that one too. See? Does everybody understand how I did that? Now, I could have held until expiration on the 109.10 as well. But if price is not at 109.101 or greater, then I would lose what I paid. It is based on an average price, and that is available on the Nadex site. They just recently changed it. So, do you ever take profits and re-enter the same strike? Sometimes on the next 2 hour I would, Ernest. For example, if I think this is going to continue up, okay, I might trade long side all day long on the USD JPY until it hits, what I consider is a resistance area, and then I would start trading it back to the short side. Now, could I have lost money on both of these? I could have. If price had stuck right here at this line, in other words, it did not go up, it did not come down, I would have lost. Well, it is green now, Kevin. It was extremely oversold. That's why I thought it would go up. Any other questions? Does everybody understand now the way binaries work? Now, what's the difference between the binary and the spreads? Okay. The spreads is something that I use when I'm expecting a big movement. Okay. Let's say that I believe this is going to go up the rest of the day. Okay. In that case, I might come in and do a binary. Okay. Right now, price is currently trading at 109.10. And I don't like that one. Let's go look at the daily. Okay, here's one. If my bias is to the upside for the remainder of the day, then, and I think it's going to be a big move, and that's important. I think this is going to be a huge move to the upside. I'm going to come in and do a spread. Okay, the difference is the binary is always going to have a payout, maximum payout of $100 minus what you paid on entry, right? That would be your profit. A binary, a spread, on the other hand, you have a floor and a ceiling. Okay, this is your floor. This is your ceiling. Okay, I'm looking to, since my bias is to the long side, I would be looking to buy the floor that was closest to price. In this case, it's 109.05. My risk is the difference between the offer price and the floor price. Basically, I think 12. Okay. My profit potential is limited by the ceiling price. Okay? Does everybody understand that? If your bias is to the short side. Okay? Again, you still have the floor and the ceiling, but I want price to go down. Okay? Okay, so I want to sell a ceiling that is closest to price. And I guess right now it would be the 110.30. And your risk is the bid price subtracted from this, and your profit is limited by the floor. Wait a minute, did I say that right? Yeah. You fear to get out of the spread with these whippy lashy moves. I haven't had any problems, Patricia. I mean, you can get out at any time. You don't have to wait until expiration. It's just like trading anything else. If you see reversal bar forming, then take your profits. That's your job. Take your profits. It takes you, I think, a little bit to get used to the spreads, but I think once you do, they're pretty easy. Does it always show your risk and reward on the screen? No, it does not. And let me show you why. Okay. And this is, let's go back and let's use a Forex binary. Okay, let's start with a binary first, and let's go back into the 1147. Okay, so now let's say that my bias is to the downside because I got a little pop-ups, and now I think it's going to go down. Okay, when I click on sell, which is the red, okay, and we're going to change this to one little contract. Okay, if you get into the market at 55, you're selling at 55, your maximum loss is 45, your maximum profit is 55. Okay? Now, I'm going to change this to the current price, okay? And I'm going to enter. Now, notice, I want you to notice here, it says my maximum loss is 40.75. My maximum profit is 59.25. Okay? Now, price is going against me, and I'm like, no, I need to get out of this right now. When I go back in to exit this, the max loss and the max profit is not correct. Okay? Because this is for entry. Okay? I'm exiting. Okay? So in this case, if I go in here and I exit, then I'm going to have to calculate what my actual loss was. Do y'all understand that? But on entry, if you read the ticket, it always tells you. Well, you have to pay attention to what your risk was. If you were risking $49, okay, but then you got out at, let's say, $20 cheaper, then you only lost $29. You can set a profit target, Kevin, but there's nothing that will get you out of the losing one unless you're watching it. Okay. On the single trade with binaries, which one has the lowest spread? Are you talking about the strike width, James? If you're talking about the strike width, 4 pips is the smallest one for a 2 hour. I don't do 5 hours. you can't really say on the single trade which binaries have the lowest spread between the bid and ask price, because those prices are constantly changing. Okay. The closer you are to expiration, the more likely they are to change very quickly. I've seen them $20 and $30 off. Okay, because I was on a 20-minute binary with 2 minutes left. You either have to babysit the trade or be able to live with the loss. You know, I can live with a $20 loss. Not so much with a $75 loss. You know, in the way I look at it, if I can't accept this risk on entry, I'm probably not going to take the trade. Because, you know, I've been in spot Forex trades where, you know, you say, okay, I'm only going to risk 10 pips on this, okay? But then the market suddenly goes against you and you're down 30 pips, okay? Well, you wasn't anticipating that, but it's hard to live with. In this one, I can always live with it. And somebody asked me earlier to explain oversold markets or overextended markets. It simply means if a market is overextended, and I like to use the stochastics in the ADX combination, but there's, you know, other indicators you can use, like the RSI will show you overextended markets. It simply means that price is running out of gas. It needs to fill up its gas tank again. That's what a retracement is. Okay, and you usually get retracements when the market's overextended. Generally, Patricia, I actually aim to get 1 to 2 risk to reward ratio. Sometimes I get 1 to 1, sometimes 1 to 5, sometimes 1 to 3. You know, but on average, I think I do about 1 to 1.75 on average. Just off of the top of my head with no calculations whatsoever. I use an ATR, okay? And this is just a simple one here on the 15-minute chart, okay? You've got a market that's overextended. It's probably going to go up to here. Now, if you incorporate higher time frames, it's probably going to go up to either 109.54, or if you're using a 240-minute, probably up to 110, okay? That's just an easy overview of it. Yeah, I do a lot with average true range. And if you watch it, Patricia, the average true range will typically coincide with, you know, one of the fib numbers. Usually it's the 50% line. Sometimes it depends on which one you're using. I have my own. It's set to 20 and 80. You know, my ADX, anything above 70 is considered overextended, you know, and I use a scanner window that gives me all of my values. But if you go and read the market news that I did this morning, let's see, the Aussie dollar and the euro, British pound overextended, the USD Swiss francs overextended, the USD JPY overextended, British pound overextended. You know, we got a lot of markets that are just overextended. And, you know, now the USD JPY is oversold on the 30-minute. and the euro British pound is oversold on the euro on the 60-minute chart. And this is just 3 time frames that I monitor, in addition to the 240-minute as well. Do I use daily pivots? No. And basically the reason is generally because I already know that I have an ATR at that level. Yeah, it really is. Any other questions today, guys? They're not the same. They're not calculated the same, James. But typically, if you put pivot levels on, you're going to see that they are in the same vicinity. Let me see if I can put the floor trader pivots on. All right, so this is the floor trader pivots, okay? The pivot line being the yellow line here, okay? And then you see where I have several sets of ATRs, which are the plus signs. Do you see how the blue ATR was at 110.08? The pivot line was 110.28, okay? The problem was they couldn't get above the ATR. I mean, it's just typical behavior. I use multi-chart scanner. I like the multi-chart scanner, basically, so that, number one, if it's an email, I can send it to me, to my phone. And if I'm doing something around the house, which I'm known to do, I've gotten into decoupage. So a lot of times I'm decoupaging and my phone will go off and I know to come back and look at the computer. I have alerts set up on everything. Yeah, that's how a lot of people use the pivot lines, Patricia. And you know, there's really, I know everybody wants to think there's a right and a wrong way, but it's really not. It's whatever, you know, makes sense to you. That's what you need to do. Is this webinar going to be archived on Nadex so I can watch it again? Yes, they record them and archive them. So, any other questions, guys? I've really enjoyed the discussion today. I'm glad y'all are asking a lot of questions. Any other questions? Thank you, Patricia. Well, thank you, Jimmy. All right. If there's no other questions, I do appreciate you all joining us this morning. I hope y'all have a wonderful day. And don't forget to sign up for the webinar next Friday when we will be trading non-farm employment for educational purposes only.